Good afternoon, team. This is your Mortgage Minute. So the yield on the 10-year Treasury, note, the benchmark that tends to pull mortgage pricing has slipped to about 4%, under 4%, making it a new resistant line for the market to beat. While the headline is under 4%, it is a bit optimistic. We're hovering around 3.98 to about 4.05. The key takeaway is that long-term rates are trending lower. Market rates reflect the bond market. For example, the average 30-year fixed mortgage has dropped around 6.3 down to from 6.34%. Okay, now that's the average. Some people are experiencing more, some people are experiencing higher. The bond market and thus mortgage market is getting a boost because inflation and growth data are thin, delayed, less pressure for higher rates. We're not getting much pressure from that because of our reports not being reported. That's pretty redundant. So our CPI and our jobs data is just not being reported right now due to the government shutdown. The Federal Reserve under Jerome Powell is signaling more dovish posture. More on that later. Investors are preferring long-term Treasury, pushing yields down. Why are yields so low? And mortgage costs getting friendlier? Here's a breakdown for you realtors to share with your clients in plain terms. Data blackout, flying blind, effect. Many of the typical economic gauges like job support, CPI, PPI, etc. are either delayed or thinner or harder to interpret. The shutdown disruption in some government data flows means that the market is operating with less clarity. For example, one analysis noted that the shutdown is thinned the federal data flow, which means fewer data points to move markets. Yield down equals better borrowing costs. So the 10-year yield dropping means the cost of long-term borrowing, including mortgages, improves. This is why you're seeing rates loosen somewhat. Fed dovish tilt, expectation of easing, meaning that the Fed is being dovish towards interest rates, meaning that they're going to stop raising it or keeping them higher and actually start cutting. But then they're also stopping the monetary balancing that they're doing with the balance sheet and might start the money printer up soon. Markets are increasingly pricing in that the Fed may halt or reverse its quantitative tightening and may cut rates. One commentary says Powell signaled the end of the Fed bond sales is near, which may help long-term 30-year fixed mortgage rates, which is what we've been seeing in the 10-year bond market. Strategic policy and overlay. From a broader view, the fact that the data is weak or murky, inflation is not surging strongly, and the yields are down means that the executive and the legislative branch have more latitude. In my opinion, and you can frame this as market commentator view if you'd like, this helps centralizing more power to the executive branch and less transparency in data with fewer constraints on policy adjustments. Supply and demand and term premium. With large deficits, heavy Treasury insurance, and investor demand switching around, the term premium and the extra yield investors' demand for holding long-term bonds is under pressure, helping yields remain low. Basically, there's a lot of turmoil in the bond market, and long-term investors that are and the demand for that is low. So basically, interest rates are getting lower just because of that pressure. Now, my view and what it means for real estate and your clients, because the markets are operating with fewer data points, the pace, and the direction of rate movement may feel volatile. Flying blind is the phrase. Few major reports headlining the Fed comments matter more. So whatever the Fed is saying, or rather whatever Jerome Powell is speaking about, matters more than whatever information we're getting from right now. I expect that we'll see a deal come together in Washington before Thanksgiving when it comes to the government shutdown. I believe there will be a rollback of part of the government shutdown, restoring of data flows, and likely push a healthcare legislation deal. Why healthcare? Because nobody wants to be blamed for dissolving healthcare access. It's a politically sensitive, essential area. I think that right now we're centralizing power into the executive branch and allowing the administration to do what they want to push forward. But at the same time, they're still going to be beholden up for the people when it comes to, coming to a deal and an agreement with Democrats. Democrats are making this a line in the sand, if you will, meaning that they're not going to negotiate with just going forward without working with healthcare, and Republicans are sympathetic to that, and I think are going to not hold us over past the holiday. But that's just my opinion. Okay. Once the deal gets done, rates and mortgage activity may pick up, and clarity returns. Data flows resume. The Fed may feel more comfortable acting, and consumers, buyers, and sellers who have been waiting may decide to move. For your clients, buyers, this is the window for relative opportunity. Long-term yields, improved affordability, even if rates are still above historic lows. Now, sellers, messaging opportunity. More buyers may enter the market once clarity improves, and realtors, position yourself as the knowledge hub. Explaining the macro in plain English helps build trust. I'm not sure if this was plain English at all, but essentially what we are looking at is, as soon as the data comes back, I believe we might even see a couple jobs report make volatility go really crazy. So essentially, once we get all of these jobs reports back in, we might see a dropping of the 10-year bond, which then will affect rates, which provides an opportunity, a small window of opportunity for people to purchase under great terms. Alrighty, so that is quite a bit on your mortgage market. What I'd like to end with is that I have a free funnel webinar going on November 6th. Please sign up for it. If you're a realtor who has never created a website and doesn't have a way of capturing information like emails or phone numbers of leads that you can market to, now is your day. Now is your time. You can sign up for my free webinar that we're going to be hosting on Thursday, November 6th at 10 a.m. I believe that is let's see. I believe that is our, what is that called? Our elite agent timing. Okay, so I'll be doing the elite agent training on that time. Please click on the link below. Thank you so much. That was your Mortgage Minute.